Well, the stock market continued to move lower this past week, and the crash will continue until this happens. And I will explain what this is, what to watch for. Plus, I will analyze the stock, commodity, currency, and interest rate markets, and then the day trade of the week on POSH. Stock market crashes are a lot like forest fires. They are really not much fun to go through, but they create new life for the market. And in that way, I love stock market crashes. If you look at the history of the market, we have seen some of the best markets, some of the best rallies come after very weak markets. It cleanses the market of overvaluation. The farther down stocks go, the more their prices start to make sense, and at a certain point, investors come in and snap up bargains. But doing that too early is like trying to catch a falling knife. We have to do it with the right kind of timing, not trying to buy the bottom, but trying to buy the market when it starts the upswing into an upward trend. Fear is what causes investors to accept prices that are too low, and that emotional response to falling prices is what creates value. Now, this can ultimately be a catalyst for a reversal of the downward trend. It's all about human psychology, looking for that parabolic move to the downside, exhaustion by the sellers, everyone panicking and selling without any scruples and just getting rid of things, and that's usually when the bottom is made. Now, it's rare that markets make V-shaped bottoms. So you won't see a market have a bottom like this. You'll see tops like this often, but it's rare that you'll see V-shaped bottoms. And so what we're looking for instead then is something I call the crash reversal pattern. It has a few components: break of a downward trend line, build of a rising bottom, and then break up through some resistance from that rising bottom. Now, I know not everyone looks at charts, so I'm going to show you what this looks like using a couple of recent crashes. And the first we'll look at is the COVID crash. And you can see back in 2020, the market had that very sharp sell-off very quickly, quite abrupt. And then it broke the downward trend line here. It built a rising bottom there. So this bottom is higher than this one. And then it broke higher. So just as the crash lower was very abrupt, the turnaround was actually quite sharp as well. They often don't move quite that quickly. And so let's look at what happened back in 2009 after the 2008 financial crisis. You can see that the sellers were in control. We know that when there are falling tops on the chart. The downward trend line was broken. There was a build of a rising bottom, but this over the course of a couple of months, and then a break higher from the rising bottom that led to the start of the recovery, and that recovery lasted many years. Now, sometimes markets will make false starts. You know, there was a downward trend line here, it was broken, and then we had a break from a rising bottom there, and that failed. And so anytime you're trying to do this, you should always plan to lose at the low of that rising bottom. So if it falls back below that right there, you take your loss and you try again the next time. I find that sometimes crash reversals can take a couple or maybe even 3 tries. And so you never want to go in wholeheartedly at first. You come in slowly, dip a toe in the water. As the market starts to gather momentum, you can start to pick up bargains in different sectors. And certain sectors will lead the market as well. You know, we'll see, for example, perhaps the biotech sector moving in advance of the overall market, or another sector like energy perhaps. So you always want to watch for individual sectors showing the crash reversal pattern as well, and then the market itself doing it later. All right, let's get into this week's market analysis. We're just going to jump over to Stockscores.com, and here is a chart of the S&P 500, and you can see that we are just dipping down through support. Now, last week I talked about how the market was probably going to pause at this support zone. It did that for 2 or 3 days. It wasn't very long. And then on Friday, we had that selling pressure that broke the market through to new lows. And that means local lows. And that means we're probably headed down further. Now, how far we go depends on where the market's going to find support. The next area of horizontal support is down at about 320 on the SPY. However, there's an interesting way to look at this. If we look at the monthly chart, very long term, and we look at how this trend historically has run, something like that. It had a little dip below it during the COVID crash. Now we can see that there's still some distance down there as well. And so, as I say, I don't know that we're done yet. I think the crash can still go farther. I think small caps may bounce a little earlier, and I'll show you why when we get to that small cap chart. But for now, I would remain quite cautious with the market as it does appear to go lower. Now remember, seasonality wise, the market tends to bottom or start to move up sometime in October or November, and then rally up until spring, maybe May or June. And so seasonality wise, we're very close to making a bottom. Could be anywhere from 1 week to 6 weeks. The seasonality that affects a lot of this is the fact that we're going into earnings season. So the market's been really focused on inflation, on rising interest rates. Well, earnings season starts in about a week, and that's going to start to change the focus of investors. And they're going to look at valuations and say, okay, earnings are this. We've had the stock fall 30%. Perhaps it's a good bargain given how earnings are shaping up. All right, let's get over to the Canadian market, T.XIU. And we will look at the 3-year first. And you can see that it is still holding its support, barely. All right, so it's still okay, but there's no build of rising bottoms yet. There's no break of downward trend lines. If we look at the short-term chart, this is the 2-hour chart going back a month. And again, you can see the sellers are still in control, so there's no reason for optimism. Now let's go back to that small cap sector that I talked about, IWM. And here I'm going to go to that max time frame, draw my line from across those bottoms, and again, allowing for this little break below. But you can see that we're quite close to the downward trend line. So we want to see if we can actually hold that support zone. All right, moving along, let's take a look at commodities. We'll start with oil, USO. Daily chart, you can see we are still in falling tops, so the sellers are in control. But where it looks more interesting and where I think we could be finding support soon is on this weekly chart. Drawing it something like that, and you can see that we're right at that long-term trend line. So we ran away from the trend line, we pulled back, we ran away, we pulled back, we've run away, we've pulled back. I think there's a good chance that we're going to bounce off of it, at least in the short term. Now, if we bounce off of it and we make a falling top and then break that line, then I think that bull market in energy is over for now. So we want to keep a close eye on this chart. Let's take a look at the gold chart, GLD. And again, let's take a look at that 3-year time frame. You can see that it's in a downward trend. Now, this is something I call a dead cat bounce candle. You can see that it's closed above its open. That's why the candle is green after hitting a new low. My only reservation is volume wasn't real strong, but that's often a sign that you're going to get a little bounce. So we could get a few weeks of bounce back here in the short term. And I think one of the reasons why oil and gold may bounce back is that the US dollar has gone parabolic to the upside. So there's our trend line. See how far we are above the trend line? I have a simple rule, I talk about it here often. When you run away from the trend line, you usually pull back to it. Run away, pull back to it. We've run away, and therefore it's likely that the US dollar is going to pull back to the trend line, and that would help oil and gold because of course they're priced in US dollars, makes it cheaper, and you could see that be supportive for those commodities. All commodities, really. All right, how about the interest rate market, TVT, which is also driven really by or really drives the US dollar. You can see that interest rates rising here. It's not so much that it's parabolic. We could argue that the trend there, so we've had this wave up, wave down, wave up. Perhaps we'll get another wave down back, and that would also help the US dollar pull back, give some support to commodities, and I also think give some support to stocks. So all of these things coming together. Now, I also want to take a look at Bitcoin because I know a lot of you are interested in that, GBTC, and it continues to be an ugly chart. You see the tops are falling and have for a long, long time. As long as tops are falling and bottoms are not rising, I am a bear and I continue to be one here. Now, the last chart we'll take a look at is UVXY, which is an ETF on the volatility index for the S&P 500. And what you can see is that we actually are breaking higher. We broke out on about 5 or 6 days ago from rising bottoms. This downward trend line is just being tested. And if we get that final flush down, then you'll see this spike higher. And this is a good way to trade emotion. So if you see fear coming into the market, people panicking, selling without any thought, just fear-based selling, then UVXY is a good way to profit from that because it will go up. I like trading this off of the, say, the 30-minute chart on a short-term basis, so we can look at the 15-day, 30-minute chart. And I had a buy on it here when it broke out from that little rising bottom. Unfortunately, we got stopped out just barely there before it came back. That's trading. Sometimes that happens. All right, so let's take a look at my ratings then. I am still bearish on stocks, US and Canada, bearish on gold, but it is showing some signs that it could bounce. Oil, neutral long term because it is right at that trend line, but still bearish in the short term because we haven't started to show any optimism. US dollar, bullish on both time frames, Bitcoin, bearish, and interest rates remain bullish on both time frames. All right, let's talk about the day trade of the week. It's been pretty dry for day trading the last week or two. Very typical for the end of the quarter. I think we'll see that start to improve, mostly if the market gets a little bit better, but also because earnings season can often drive a lot of the abnormal activity that we look for when we're day trading. So let's jump into the day trade of the week. And this week it's on POSH. It wasn't a big gainer, but that's the kind of week it's been. We had a pullback break here. So we had the run up here and then the first pullback. There's my little action candle indicator. You can learn more about that action candle indicator in the trader training area of Stockscores.com. And it is an important component of my trading strategies. It's a statistical measure of buying and selling pressure. And so in this case, the buying pressure was strong, and that often comes before the market moves up. And you can see it did move up. Wasn't a big move. It got up to 3 times risk. We call that RR, 3RR. And then a sell signal right about in here at roughly 2RR. So the economics of the trade, for every $100 of risk, it would be 470 shares, which is $7,182 of capital. If you wanted to margin that, the brokers will let you do that 3-to-1. That means $2,400 of capital to tie up this position. It only got 2RR, which is $200 of profit, but that's still an 8.3% return in a few hours. And it's hitting these base hits right now in trading. That is really what's working. We don't have a lot of home runs. We have to trade the market we have, not the market we wish we had. But I'm optimistic that we're going to see a change in that soon as we go into stock trading season, which again starts usually sometime October, November and runs into May. Well, hope that you've enjoyed this week's Market Minutes. If so, click on the like button, subscribe to the channel, leave a comment. Do you think the market's going to bottom anytime soon, or do we got bigger weakness ahead? Love to hear what you think. Hope you've enjoyed it. Trade well.